Hey, welcome to the third video in my price action educational series. This one is well in demand. It's called the triple swing strategy. Now, disclaimer, none of the concepts that I use either in this video or to trade with week to week, day to day are invented by me. Okay? They're all common time-based price action concepts used by various number of traders over many years, and I've just combined them together, back tested, forward tested, and found something that works for me. And this is it. I recommend you to do that yourself with this strategy as well, because you might find edge somewhere else within the boundaries that I've already set or outside the boundaries that I've already set for you. So what we're going to do is we're going to take a look at the theory, and then we're going to jump onto the charts. I'm going to break this down as simply as possible. And if you have any questions, drop them in the comment section and I will definitely get around to responding and guiding you through this. Make sure you like and subscribe, and thank you for joining. Okay, so let's get stuck in. First things first, non-discretionary rules. Simple. Okay, these are the rules that you cannot mess with. One, this is primarily based on the weekly chart. Okay, you can go and look on the daily chart, you can go and look on the hourly chart, but that is not this strategy. Okay, I've tested it forward and back on the weekly chart. This is the rule number one you can't mess with. Number two, you're looking for two consecutive swing fails. Not four, not five, not six, not one. Okay, two. We'll go over that in a few slides time and explain exactly what you're looking for. Number three, target 50% of the previous week's range. Now, if you've been watching any of my previous market reviews or any other educational lessons or caught up with any of the charts that I post on Twitter, you would see that I mark out the previous week's range, and you will know where the middle of that is. Okay, so these are the three rules that you cannot change. Weekly chart, two consecutive swing fails, target 50% of the previous week's range. Discretionary rules. Now, this is where it's up for interpretation based upon your own risk tolerance or your own way of entering the market or your own backtest and forward test, which could find edge somewhere else in terms of where to take profit. Number one, entry time frame. Okay, that is up to you. How you get into the market after the market is given us the two consecutive swing fails on the weekly time frame is totally up to you. Okay, I have my way of entering the market. You will have your way. I tend to look for maybe M15, M30, something like that, but that's going to be on you. Okay. Number two is your trade entry trigger. I look for breaks in market structures. I look for stop runs of highs or lows. I look for failure patterns. If there's a little range forms, I look for a little failure pattern. There's a number of ways to get into the market and a number of triggers uh, that encourage me to step in. Okay. Number three, take profit percent at target. So for me, I close the trade almost always. Okay, it's very rare. I'll just set my TP at the 50% of the previous week's range. You, depending on your risk tolerance, you can try and hold that trade for as long as you want, or you can take 50% off, you can take 20% off. You can do whatever you like to do, okay? These are the discretionary rules, and they're yours to play around with, okay? What is a swing fail? So the strategy is called triple swing strategy, and it is based upon SFPs of weekly candles. And an SFP is a swing failure pattern. I learnt it from Tom Dante. Many people have learnt it elsewhere or with him. It is, it's a common price action concept. It's quite simply Japanese candlesticks when the highest wick, as you can see on here, we have a high form. Okay, these are weekly candles, okay? We have a high form, and then the next week takes that high out but closes below. Okay, that is a swing fail. Okay, because it failed to close above and generally quite bearish. Okay, I mean, depending on how it closes, this one closed green. If it was to close red, you would say, well, that could be, time to look for a reversal. Um, that this one closed within, but it closed green. Okay, so that is a swing failure pattern. You can probably type SFP in YouTube and get a more in-depth complex lesson that will break it down for you much better than I, but that is as simple as it gets. What is a triple swing? So a triple swing is where you get the two consecutive highs. So we have a high form, okay? Then we have an SFP of that high and it closes. Now we are waiting for, this is where the meta game comes in, okay? So we're waiting for traders to short the SFP on the weekly and place their stops above. So we know there's a lot of liquidity there and we're waiting for that to happen. So we step in when we know or when we are confident that traders have been taken out, okay? And this is how we come up with the concept of triple swing, because we had the weekly candle where it closed here, okay, the previous weekly candle, it opened here, drove up, took out all them early shorts, okay, who were um, looking for the market to reverse after the first swing fail. So here we had our second consecutive swing fail and we closed inside. When I say inside, I mean below the previous week's high. Below the previous week's high. Okay, you want to close inside. So that is the triple swing. One, two, three, two consecutive swing fails. Okay, then we go back to non-discretionary rule number 3, target 50% of the previous week's range. Now, when we're using the previous week's range, we'll come onto that on the chart in a moment, but we're looking at this candle. Okay, so here was the final swing fail. There's the market close. Now we're looking at this weekly range, which here's the low, here's the high, and we're looking for the mid-range. So we'll mark that out, and it'll probably be in about somewhere in around there. Okay, and we'll drag that across, and we're looking to trade from there into there. Live trade example. Here was the trade I took a few weeks ago, maybe 2 or 3 weeks ago. What was that? 3 weeks ago. 3 weeks ago exactly, 7th of the 8th. Triple swing into SR. This was on ApeCoin, Bored Ape Yacht Club. It's their coin. Triple swing into SR. This is my banker for the coming week if it closes below last week's high. Now here's a zoomed in image of that chart. So we had, I mean, this was still trading on that weekly candle at this point. Okay, that we were preparing for it to close below. So we had our high form, we had an SFP, and then we had our second swing fail. Market was still live at this point. I think it was on a Sunday. It definitely was on a Sunday if it was 3 weeks ago. And it closed below. Okay. Um, Now we have our invalidation, which is the high of the final swing. Okay. Now we have our target, which is, as we mentioned just a moment ago, we look at the previous week's range and we mark the middle of it, which is target 1. Okay, there. And as you can see here, is a better idea. So here was the high, and that's where your invalidation is. Okay, you're wrong if that high gets taken out, and that's where your stop loss goes. Now, where you enter is up to you, but your stop loss is, or your invalidation is there. You can change that. Okay, that is up to you, but I know that this works. So this is how I want you to use it. Um, and as you can see, here's the previous. So essentially, you had the swing up, 2, 3. Okay, so you can see there, really clean. Okay, and here's the mid-range of the previous week. I'll show you how to mark that up when we get on the live charts. And we were looking for We're looking for a drop into there, and that was our trade done. And there we go, bang, drop straight into target one, high holds. I mean, on the way, there was plenty of opportunities for you to enter. You could compound that trade down. But that is the strategy. And it's as simple as that. Obviously, execution as the market is moving is a different ball game, and that is where you come in. Okay, because this is this is requires you to trade manually, and obviously there's going to be a lot of emotions running through your veins as price is unfolding on the chart. Very important for you to make your plan and try and be as mechanical or robotic about it as possible. This is why I've given you non-discretionary rules, and this is also why I've given you discretionary rules. I'd like you to stick to my rules as much as possible, but by all means, go out and do some back testing. If you're a quant or you're great at coding, you could run the numbers back for many years and then run it forward and see what you can come up with. But that's the strategy. And now we're going to take a look at the charts. So here we have the ape chart. Okay, so what I'm going to do here is I'm not going to go over it again, but we're going to just mark out the previous week's range so you're clear on that. So here was our initial high. Okay, here was our initial high. Here was our first swing fail. Here was our final swing fail. So now we have our invalidation. Okay, stop loss would go, I don't know if there's little crosses there. Right, stop loss would go up here, but let's break it down on the H1 actually. So take this to the daily, okay? Um, so stop loss is up here, okay? Back on the weekly, we have previous week's range, okay, which is important. So we mark out, this is a Fibonacci tool where I've just taken everything off it apart from the 1, the 0, and the 0.5, okay? So what you want to do is set that up in here. Just use the 0, the 1, the 0.5, okay? Nice and easy. So we mark that out, or get rid of that rather. We mark that out from the high to the low, and that gives us the mid-range daily. So you can see as price swung higher, taking out that high, okay, got back inside, dropped straight into our target. Okay, that is how we um, find our target. That is how we mark our levels. How we enter, it's your choice, okay, your choice. But that is ape. So let's have a look at BNB. So there was one on BNB. I mean, they happen often, not often enough to execute them at the highest probability, but they happen, and quite often they're reversal points as well. So you can swing this a lot further than the target I give you. BNB. So this is a long rather than a short. So you can see what happened over here. Okay, we had a low form, we had a swing fail, and that closed very bearish. Longs would have got in. Sorry, that closed very bearish. Shorts probably would have got in at that point. I mean, I wouldn't have known what had happened because I can't see the rest of the price action. This only goes back to 2021, so who knows what would have happened there. The point is the concepts are the same. So we have our first swing fail. Okay, just took it out, closed. Then we had our second swing fail. Drops in, closes. So now what we do is we mark out our weekly range, gives us our 50% target. And as you can see, this then went on a rip, but of course you know, where it closed and where our target was, it gave us something to take out of the market. And I don't know if it's going to let me go back far enough for us to see, but yeah, there we go. So you can see there, like, it got inside, closed. I mean, we could have entered anywhere in there, and the problem with this is the stop is very wide. Okay, the value wouldn't be there. So what you could have done would have been something, if it lets me, it would have been look for your entry could have been somewhere in here. Okay, there was a lot of stop runs, you can see. This is where it becomes discretionary. So I've given you them rules. So you could have negated that and said, right, that's not going to be my stop loss. That's too wide. The value is not there for me. The next run of the lows is going to be my invalidation, which here you had a low form, then you had a break in the market structure, so you had a higher low. So you know this should hold, so it can become your stop loss. So then you can look for entry whether somewhere in there. You can drop this even lower and find your entry, okay? And you have your stop loss and you have your target, okay? So that is BNB. LTC. LTC, so these are all weekly charts. In here, okay, in here. So you can see this happened on an uptrend. There was a short on an uptrend. Okay, so there was a macro uptrend, what, 10 weeks upwards, 10 weeks upwards, pull back, 10 weeks up, expansion, sells off, okay? Now, this is proof that it doesn't matter what the trend is. You're just looking for the fractal, right? You're looking for the swing, the swing fail, the swing fail, boom, short, long, 50%, done. Okay. Now we have in here we had a high form, and important for you to note or remember, you don't want the candle bodies to close outside. So as an example, I mean that one's just on the limit there, but um, really you want it to be a clean, clear swing fail. So LTC, this will be the first swing high, second swing high, okay, and then you had your weekly range, which is there, and there's the mid range. Does it come back before taking out this high? Yes, it drops in. Now let's have a little look on the lower time frames and see what actually happened. So that was in there we were looking for. I wonder if we can get down on the hourly. I wonder if it goes back far enough. It does. There we go. So again, look, you can see that is an example of a little bit high, okay, for you to have your stop loss there. There's no value. Even if you went it down here, your target in there, with your stop loss there, it's just not a good trade, okay? That's not what you're looking to do. Now, you had various stop runs in here, breaks of structures, okay? You had another run on all the highs there. To be honest, this one's a bit messy. If we're honest, it came all the way back up. I mean, to be fair, if you'd have top ticked that, you'd have been a legend, but I can't imagine it. This is not the best example because getting in would have been a problem. So your invalidation held, but if you were going to try and get in, unlike Ape, you had plenty of chances to get in and the high held, and it closed not too far away from the previous swing high. But if you were going to get into this one, you would have struggled. Okay, so the concept was there. Um, but getting into the market, it didn't offer you that, but it did drop straight into the target when holding that high. So in real time, every situation is going to be different, but that is the concept, that is the strategy, and I hope you enjoyed the lesson. As I said, if you have any questions, drop them in the comment section, and I'll get back to you. Thank you for joining. Grateful for all of your feedback on all the videos I produce for you. And I'll see you tomorrow for the weekly open. Goodbye.